The housing market killer is here, and you're doomed. We are all in for it. Listen up, ladies and gentlemen. We're sitting back watching the market as things trend, as things change, and I have some insight for you guys. And one of the biggest things is the market really killed? Are we doomed as investors, as buyers, as end home buyers? Where are we with the market right now? And one of the biggest things I've been talking about is I've been explaining to people our business model for the last 4 years, and I've been telling people where to invest their money. Now, for those of you guys who have listened, congratulations, I know you're doing well. For the other folks that have not listened and say, Jerome, I want to play it safe. And I just want to just dibble-dabble in the market, and I want to take advantage of just making sure that when I invest in the market, I do it conservatively. And for those people that have done it, you've made the mistake. Understand that I've been telling you guys, do not be investing in entry-level homes. You're dealing with the masses of people that can barely hang on financially. And so as I sit here looking at what the Comfort Report has to say about market values and where housing is right now today, listen up, ladies and gentlemen, because what I've been telling you for the last 4 years is finally statistically proven true and is happening in actual reality. And so for those of you guys that are investing in the $300,000 to $400,000 market range for new homes, that market has proven to be the biggest reduction in the housing market than any other sector of housing thus far. And so I've told people, don't play it safe. Less is not more. When you go in this type of market, going in conservatively will hurt you. And so the biggest area of real estate that's gotten hit in the residential sector right now is that $300,000 to $400,000 mark. Look, anything under $400,000, there's not a demand for right now. And one of the biggest reasons why is because of the pool of home buyers that are being attracted. Now, they did a pool, and the Comfort Report went in and said, okay, we're going to go in and look at where the housing market break is. And they looked at houses over the price range of $400,000, and they looked at the price of homes under $400,000. And what they found is that the housing market on houses over $400,000 have not been nearly as affected in this early recessionary market as homes under $400,000. Now, why is that? So we look at home buyers, first-time home buyers. Ladies and gentlemen, a 2% change, 3% change in interest rates, it changes things drastically. If you haven't already seen the prior video I did on interest buy downs and what 2% does to a mortgage, you need to go back. I'm going to put that video at the end of this video. Click and watch that video just to understand the simple concept of what 2% variable in interest rates does to a home buyer, an investor, and a long-term holder. Ladies and gentlemen, that market sector is getting annihilated. And if you want to see more content just like this, you like this information, pound that thumbs up button and that click and subscribe so you're notified when videos like this come out in the future. Now look, ladies and gentlemen, the average price reduction on homes under $400,000 has been nationwide about a $10,000 price reduction on home. Not a big deal, not a big variable, but still a variable. And understand that the demand for these houses have went down substantially. So home builders are starting to feel the push. And here's why. One of the big buyers for this sector of home is not just first-time home buyers and entry-level home buyers. This is also one of the biggest pools as far as rental investors and also fix and flippers. So in this market, a lot of you guys that are going in saying, hey, I want rental homes. You're not going to go in and pay a lot of times $400,000, $500,000, $600,000 for a rental home. You say, you know what? I'm just going to get a simple home. I want to buy it. I want to rent it for $2,000, $3,000 a month. I'm going to make more money than what I'm paying in interest. And now that variable right now, the tables have turned and we're sitting back and investors are going, now I cannot rent this for what I need in order to be able to purchase it at the price I was once purchasing it. So hence, I need to get this for a reduced price. And so some of you guys are sitting back going, well, there's a bigger rental pool in this market now because more people cannot afford to buy these homes. But is there really? So when we sit back and we look at renters and we look at where they're at, now they need to get the home for less money, and they also need to have lower interest rates in order to make their numbers float. So can they just continue raising rates on rental rates to be able to push up the market, to be able to accommodate these variables? Well, there's a threshold of reasonability. And one of the things that they were talking about on the comfort report is they said, look, it isn't that people go in and they just reduce their house, they compromise their lifestyle. So what happens is this is a lifestyle adjustment that happens to people in the lower sector of the market, because when investors can't go out and they can't make a return and then they can't push rents anymore, there's just not a reason for them to buy in that market sector anymore, so they migrate out and they start investing elsewhere. Now, what happens to the fix and flippers? And I've been talking about this for the last 2 years, and I said, look, fix and flipping is a thing of the past. The money is in buying land and building new houses because of the equity standpoint that you gain, which I'm going to talk about here in a second. So for those of you guys who are sitting back going, well, Jerome, how do we go in and make profits buying land and building houses? I'm going to talk to you guys about that here in just a second, because there is a unique strategy to how what we do works so damn well. And so I'm going to talk to you guys about that. But understand that I've been talking about fix and flippers, and this is the big fix and flip market. Fix and flippers don't go in a lot of times unless you're in really high-end markets and fix and flip $1 million properties or properties that are over $400,000 or $500,000. They go in and buy the entry-level homes. They buy them for a reduced price because a lot of times they're financially distressed and physically distressed. And so they go in, they renovate those properties, they rent them, they do a cash out refi, or they sell them and they turn a profit. Well, the only problem now is they're compressed, because the same home that a buyer was able to buy for $30,000 more, which is hence their profit, they can no longer afford. So what happens to that market pool when they can no longer afford that house? Fix and flippers get stuck with inventory, or they're subjected to selling a home for either a reduced price and no profitability, or they land up losing. One or the other. They land up losing money or lack of profitability. That's why I've always told people, don't be buying land and building houses in the $350,000 sector. It's not the safe market. Less is not more in the real estate market right now, and the comfort report just proved it. Ladies and gentlemen, $400,000 and above, the average price reduction between $400,000 and $850,000, which is where we encourage people to invest their money right now, the average median price reduction is only $14,000. But there is a demand for this product. And the demand for this product is rapidly increasing because of the reduction in the demand for homes under $400,000. And we have a more affluent buyer, a more stable buyer, and we have people that understand finances better than they do in the $300,000, $400,000 range, where entry-level home buyers are barely entering the market. Fix and flippers and rental investors are sitting back, halting their purchasing power, where in the $400,000+ range, you don't really have a lot of investors. You don't really have a lot of fix and flippers. Those were never variables nonetheless. And so home buyers in that market over $400,000 are still going in saying, hey, we would like to be able to still get the home of our dreams. Now, the reality even in the $400,000 mark is that they have to also compromise what their expectations are in that market, because they're going to get less product for more money in the $400,000 range. And hence, here comes why what we do in our business model works so well. So listen up. If you go in and the average median price reduction nationwide is $14,000, who takes the bearing of the price reduction? You as the builder, you as the developer, you as the end user? It all starts at the ground up, and the ground up means the land. One of the biggest sectors that have been more profitable than any other sector of real estate in the single-family home sector is land itself, where just 2 years ago, you could buy a single-family lot in some markets for $30,000 to $60,000. Those same lots are now the $30,000 people are paying $50,000 to $60,000 for, and the people that were paying $60,000 are now going in and paying $90,000 to $100,000, and the people that were paying $100,000 are now paying $150,000 to $180,000 for the exact same lots that they were buying just 2 and 3 years ago. So because these sellers are in this land typically for less money, they have a spread of profitability that now has to get humbled. So I encourage people that when you start this buy land, build house model, everything starts from the ground up. And if you overpay for your land right now, it's going to come out of your bottom line and profitability. Why not take that profitability out of the bottom line of the seller of that land? And when you start building that house, you've already worked in that price reduction on the front end of your purchase, so that way you don't take it on the back end of your purchase when you go to sell your single family home. And so I tell people, it all starts in the land, where you guys need to go in and start taking price reductions off when you're going to take it on the back end. You have to start taking those price reductions on the front end, so that hence you don't wake up every morning to go to work for reduced profits or no profit at all. So the buy land, build house model has always been the best sector to do to be able to make profits. Now, I always said the profit spread over $400,000 substantially greater than those in the $300,000, $400,000 mark. Why is that? Because in the $300,000 to $400,000 mark, you have all of the program builders, the mass builders, the D.R. Hortons, the LGI Homes, the Lennar Homes. You have all the big builders that are competing against each other for the best product in the most needed market, not the most desirable market, the most needed product that's out there for the masses. But now these people are halting, they're putting on their brakes, and the profitability comes in volume, not in single unit real estate. So for you investors out there, I sit back and go, get over that $400,000 hump and go and take advantage of the larger profitability that holds in the $400,000 to $800,000 range of building houses. As an investor, that's exactly where I would be, is in that $400,000 range, to be able to take advantage of maximizing your profits without hindering what you do and how you do it long term for reduced profits and profit spreads. And so, ladies and gentlemen, the market is showing its signs of weakness in that $300,000 to $400,000 range. Don't subject yourself to that. Bigger in this instant is always better. If you're looking to buy land, build houses, there's no better time than right now. You just have to do it with the right strategy in the right market sector. And so, ladies and gentlemen, is the housing market killed? Is it really the end of all end? Well, I just think it depends where you invest in. And if you invest in the right market, it's not what you do, it's how you do it. If you do it in the right market sector, and if you understand where profit shares are spread and where you can reduce your liability, you'll always win. It's in the land, ladies and gentlemen. Reduce out those prices on land purchases, and let's go out, let's buy some land, let's build some houses. There is still a mass shortage of houses in the United States that even a decade is going to be a challenging standpoint to be able to correct this shortage of homes. We just have to make them affordable for the end buyers. Ladies and gentlemen, my name is Jerome Maldonado. I've been developing real estate for 25 years. You want more content just like this? Pound that like button, subscribe to our YouTube channel, and I look forward to seeing you next time.